What's your take on what Russia has done, and is anything they're talking about doing going to work?
Well, the rate hike this morning was expected, 350 basis points. Some people expected capital controls at the session this morning. They didn't do that. It failed, really. The ruble rallied a bit, and then it's back towards the 100 level. Market's not convinced, and now you've been reporting the capital control story. I mean, very predictable. The reality is rate hikes and capital controls don't solve the underlying problem, which is the war. Putin is losing the war. It's very bad for Russia's balance of payments. Obviously, sanctions are hurting them, hurting on the export side now with the oil price cap, hurting them in terms of imports cost a lot more, and also capital flight has accelerated. And remember, also, sanctions have meant that a lot of Russia's foreign exchange reserves have been frozen, so they can't use those in the defense of the currency.
Tim, why is a weaker currency a bad thing? Why have they decided to fight against that weaker currency and hit the economy, in theory, by raising rates as a result? Why is that the better option that Emiliano is going with?
Well, I mean, a weaker currency means higher inflation, exchange rate pass-through. There's a danger, I think, that you see a complete collapse of the currency, which they obviously don't want as well. And I mean, generally, countries like stronger currencies. I mean, it's a sign of success, economic health, well-being. No country in a good place devalues its currency. Countries devalue when they have problems, and I think that's the reality at the moment. The war's not going well. It's costing a lot of money. Sanctions are beginning to work. The current account position, there's a massive deterioration for the first 7 months of the year. The current account surplus was down 85%.
What would happen with capital controls?
Well, likely at the moment, Russians can get something like $1 million a month out of the country. They've been doing that. You can see from partner data from Central Asia, Transcaucasia, Turkey, Dubai, Russians are getting money out. They're not buying the story. They're not buying the Putin story. Likely that limit will be reduced very significantly. They did that actually straight after the invasion in February 22, because obviously the currency went to like 120 then, so they did that. They did stabilize the currency. But I think the difference this time around is the balance of payments look really bad now. I mean, the oil price cap is really hitting those oil and energy revenues.
So what happens next? How does this story evolve?
Well, unless the war ends and sanctions stop, it's not going to get any better. Russia has no route to victory in Ukraine. I don't see sanctions easing. The availability of dollars, which they need, is not going to get any better. They're just going to draw down reserves. So unless they, massively hike rates and completely close the economy with capital controls, which stops growth, there's kind of no easy way out from this.